Bitcoin's adoption is relentless for different reasons. It's a great balance sheet asset. It's a savings asset. It's a long-term vehicle. It has that, incredible qualities to it. And I think adoption just continues relentlessly over time. So I don't see any change to that whatsoever, even if the layer 2 doesn't really take off, even if they don't build smart contracts on it, I don't think it matters. I think Bitcoin has its value proposition and people are pretty comfortable with it. And it's very different to Ethereum. It stands in its own, and it's universally accepted for what it is. So my price prediction is, I still think it gets to about somewhere between 200 and 300,000. But it has traded terribly. It has traded terribly since March. We broke new highs, still can't really break higher. We don't get a retail acceleration point. It doesn't trade very well. That's the weird thing about it. Now, that could resolve itself with an explosive upside move, which is what I think is going to resolve it. But it really has not traded well this year. It's basically gone nowhere all year since the beginning, since March. I mean, I'm looking at my screen. As of today, Bitcoin is up 95% this year. Ethereum's up 517% this year. And XRP that's on my screen is up 335% this year. So Bitcoin's been the worst asset to own of the majors. This whole space is driven by adoption and new entrants. The number of active wallet addresses has remained below peak and when price got to peak. So what we're not seeing, and the number of new wallets is still, the seven-day rate of change is still relatively low. So what we haven't seen is headlines of Bitcoin goes to new highs, up 50% in a month, that drives in retail and panics in institutions. So we've been missing that, and I think it comes. Institutions are allocating, but we're now, in the last 2 months of the year, in the last month of the year. So generally, if they're making their asset allocation decisions, they'll either put it at the end of this quarter or beginning of next quarter as they start fully allocating into this. So I know the institutions are all coming, they're all involved, but I think a lot of them are like 2022, we're going to allocate to Bitcoin. I own some XRP actually.
A lot of XRP holders are going to be excited to hear about that. When did you take a position?
A year ago. And I bought it for the reason that A, it does have use cases and it is being used. And B, the court case is a phenomenal risk reward. It got heavily discounted in the price. And then I looked at it and thought, well, what's it going to do? Fall 100% from here to zero. But if it gets solved, it's, 10x. And I'm like, well, that's a no-brainer. Why would you not take a 10-for-1 risk reward that has a catalyst around it? It's just kind of interesting. So, I just thought as a special situation, it was interesting. We've got a fight and it has to happen. And the fight is a generational shift between those who grew up with the securities laws of the 1930s and the old system, which, let's face it, has failed for everybody. And there is a young generation who wants to own these assets because it's the only asset with the kind of upside that they need to build wealth. Because with equities at all-time highs, bonds, all-time low yields, high valuations, credit, there's real estate. I mean, everything makes it almost impossible for a 30-year-old to generate long-term future expected returns in the same way that their parents had. So crypto's it. And if you are going to try and take that away from the young people, you have to remember that they're the largest voting group. And if you're going to take away their future opportunity to invest and save. So I think it's a generational battle, and I think it will be a grand compromise. I think Gary Gensler has laid down the hard line because that's how you negotiate. You start with a tough line because he's the school teacher. He's saying you will not do that, and we will prosecute all of you. Everybody else says, just leave us alone, let us run free, let us do whatever we want. The answer will be a grand compromise, and it has to be a new set of laws called, let's say, the Digital Asset Law of 2025. But we've got time before we get there because we've got to have this fight first. And they have to realize that there is no political will to fight this. So that's got to happen. Everybody's trying to apply the brakes because everybody knows it's moving at lightning speed. Don't forget, this is the fastest adoption of any technology in all recorded human history. It's being adopted at twice the speed of the internet at exactly the same size of market. And everybody's terrified. They're also building, Goldman Sachs got a crypto unit. Everyone's got crypto units that they know where it's going, but they want to slow it because they want to participate in it. But it's happening in this dispersed, decentralized manner that is so impossible to keep control of. So yes, fear does come into it. And they'll be saying, you need to stop these crypto people. They're speculating. So what does that mean? What it means is, well, it should only go to those people who can afford to, and it should be by advisors. They want to be the gatekeeper. Their job is to be the gatekeeper. That's how they get paid. There's no gatekeeper in crypto. And they desperately want to assert themselves as a gatekeeper in the middle to get some slice of that pie. But that's not what this space is about, and everybody knows it. For me, and I refer to it a lot, this is a fourth turning moment. These things will not survive. We need banks because they currently know us better. Once more of our life is on blockchain and it can be verified, it's actually pretty easy to lend in a lower risk way. Also, it's pretty useful to have relationships in banking. If you're a small farmer, you want to bank with a local bank that understands agricultural issues, stuff like that. So I think that matters. But I don't see any purpose for money center banks in the middle of the US, for example. They're just not going to survive this. The investment banks, they supply wholesale liquidity and advice to navigate the system. That's not going away for a while, and they understand this game very well. They've dealt with new product disruptions like derivatives. They know how this works. So I don't fear for the investment banks. I do fear for the smaller money center banks. It's going to change every business model, how we do finance, the entire financial system, how we store, settle, and transfer everything. It's gigantic. It's a global change of business model. That's what it is. And financial architecture and system. We haven't done that in one go before. That's ludicrously big. So yes, it is one of those moments in time that we're lucky to be alive because we're witnessing absolute history in the making, and we can be part of it. And that's why I refer to this as the largest kind of redistribution of wealth or new distribution of wealth in all history is happening in front of our eyes.